Welcome to the Friday edition of FreightWaves Now. I'm Emily Zink. We have a jam-packed show for you today, but first, let's start with Kevin Hill. And Kevin, we're talking about overcapacity in the market, meaning too many trucks. Why are there so many trucks out there right now?
That's a good question, right? So everyone went out and bought trucks in 2018, expanded their fleets, chased rates, and now the market is flooded with capacity. And as we can see on our tender rejects, we're under 4%. So this really means that for every 100 loads tendered, less than 4 are rejected, which means that carriers are snapping up loads. There's not really a problem with capacity. So we've been expecting a drawback of capacity and it hasn't hit the market yet. So we went out and asked carriers, and we also asked insurance companies exactly what they're seeing and what their plans are for the next 12 months. And this is our results. So in blue, we have carriers. And this carrier question is, what are your plans over the next 12 months? In the orange, we have insurance companies, and this is what they've seen on policy renewals year to date in 2019. And what we see here, this is standing pat. This is increasing up to 20% their fleet size. This is decreasing up to 20%. So carriers are still pretty optimistic. They're going to stand pat or increase their fleets by maybe 2 or 3 trucks. The most aggressive are fleets between 50 and 100. For insurance companies, they're seeing a little bit more of a decrease than carriers have planned. But what this chart really shows is still a net positive of adding capacity into this market of overcapacity.
Yeah.
So that could change at any moment. And I think if spot rates stay depressed under or tracking 2017, that we'll see a little bit of a pullback. But for right now, we're just waiting to see. And we'll be doing an insurance survey every month going forward, so we can be on the front edge of finding this capacity and what's happening with it. And this is part of a research report that we have coming out on Tuesday for Sonar subscribers, and there should be a write-up on FreightWaves.com in the coming days, so you can look out for that on FreightWaves.com.
As always, some great information. Thanks, Kevin.
Welcome back to the Carrier Update, sponsored by AT&T Business. My name is Kyle Cunningham. We're going to take a look and see what's happening all around the country today. But first off, let's flash over to the East Coast. Columbia, South Carolina, looking at an outbound tender rejection with refrigerated freight up 110% as of yesterday. So if you're pulling a frozen trailer anywhere in the Southeast, you want to take a note and look at Columbia. So let's look at the chart and see what's going on. This is our blue mountain here, our outbound reefer tender rejection. So you can see as these rejections are going to rise, that price volatility is going to go up, freight's going to move to spot. Let's look at the moving average, this white line. You can see it's pretty standard across the last 50 days. This yellow horizontal line, this is kind of our breaking point, right? We've still got room to grow a little bit more on the rejections out of Columbia, South Carolina. Watch this market. Now let's take a look and see what's happening in El Paso, Texas. Here's our blue mountain, our outbound tender rejections in El Paso, up 23.89% as of yesterday, bringing it up to 12.24, a carrier-dominated market. What is happening in El Paso? We've got here our yellow line. This is our outbound tender volume. And we've got our inbound tender volume here in the white line. An elevated amount of outbound freight is going to provide a lot of optionalities for the carriers. If we see our van tender outbound, that's going to be 14.47. So got a van trailer down in the Southwest. El Paso is one to possibly route yourself towards. Taking a look at what's happening next, let's see outbound rejections in Las Vegas, Nevada. Here's one that's actually turning down. We can see, we talked about Vegas earlier this week, still a carrier-dominated market at 12.11%. But this line right here is trending down. Lots of inbound volume, lots of capacity in that market. Vegas, you could take a gamble on it, see what happens. As always, stay tuned to your carrier update to see what's happening all across the nation.
Improve your fleet's efficiency with AT&T Fleet Complete, a 4G solution for tracking vehicles and simplifying ELD compliance. AT&T Fleet Complete, delivering fleet solutions for every business.
Hey everyone, and welcome to Futures Friday. I wanted to touch on the Los Angeles to Dallas lane this week because we had a lot more activity. We had a few more trades in the October-November section. So why is Los Angeles to Dallas such an important leg starting in October-November? Well, I have the long-haul van freight rate index from Los Angeles to Dallas pulled up. This is the average spot rate, excluding fuel, for this lane for the past couple of years. You can see every year in October and November, this leg starts to really pick up in rates. last year was extremely volatile. So a lot of shippers and carriers have an interest in what's going to happen moving forward into this year because it's very unknown at the magnitude of how high these rates are going to get. So what happens in the end of the year is a lot of this freight comes into the port of Los Angeles, retail picks up. Retail is one of the only sectors of the economy right now that is kicking on all cylinders. A lot of robust growth in that section. So moving into November, where all the shelves need to be stocked, it moves across the country, hops on the trucks, gets to warehouses, and goes into the stores where everyone starts to purchase them. So very important leg in the country, especially one to watch moving into the fourth quarter this year. All right, and that's it. So everyone have a great weekend. Be sure to subscribe on YouTube, follow us on LinkedIn, Facebook, Twitter, and Instagram.